All right, guys, we're back again with another great episode, PFREI. Fuquan Blah, I'm your host. Today we have Mr. Ryan Parson. Hold on a second. I got the bell. I don't have the little control sound thing yet. I'm working my way up to that, Ryan, so you got to excuse me. Let me introduce you to the group real quick and read your bio. Ryan is the founder and chief investment officer of the Mal Market Club. Ryan is also the founder and CEO of Heritage Capital USA, the parent company, where he started to focus on the needs of accredited investors. And he has an MBA, a CFP, and a CHFC. Ryan has more than 25 years of experience in the financial services, insurance, and real estate. His unique expertise comes from an in-depth knowledge of both traditional financial services, market, and alternative investments, as well as his rich history of activity in various sectors. Ryan is also a nationally recognized speaker and educator on topics related to alternative investing and portfolio management. Welcome to the show, Ryan. I'm really grateful that you took some time to come on the show, because I think what you had to talk about, which is way different than most of the other people that I interview. Most of those guys are active real estate guys, or they run a fund. You run a fund also. But you have a little different twist on what you do with the Mal Market Club, which I think is something that everybody needs to know. And one thing that I always get from you, because we're in masterminds together, where you talk about the way you blend your portfolio, right? So I definitely want to ask you some questions about that. And then we'll also jump into how everybody is chasing yield and having a steady yield, even though if it's sub 10%, how it can be greater than chasing and jumping in and out of deals. So we'll get into all that later. But the first question I always ask the guests is, why are you passionate for real estate investments?
Well, first, Fuquan, thank you for having me, and thank you for inviting me to your show here today. It's always a pleasure talking with you at our various different masterminds that we're at, and the passion for real estate that I have is further only bolstered by guys like you that are really out working for the high net worth passive investor, and even the active investor too, because real estate for me, what it's done for my family and me is it bought our freedom. It was a pathway to financial freedom. And you know a little bit about my personal background. I had the corporate America shackles on and had a great experience, for 19 years. But I was realizing, Fuquan, that I couldn't live my best life. Sitting out here in Western Colorado in the middle of the winter months here and being able to snowboard when I want to motorhoming throughout the summer, and being able to spend the time with those that I love and that I care about. And real estate bought that for me. And because part of the way that I view money today, Fuquan, is the green stuff, the dollar bills, so to speak, is purely the vehicle to turn my dreams into their physical reality. And real estate has been the alternative investment sector that I have found that has been certainly not without its risks and without its challenges, but it's been the most predictable way to bring the most predictable passive cash flow to me as an investor to allow me to live my best life. And so being able to help other high net worth investors who truly want control of their wealth. They're not abdicating it to a financial planner. They're not abdicating it to stock market. Not that you might not have that type of person or even traditional investments in your portfolio. But when you decide that you want to take control of your wealth or take back control of your wealth, if you have abdicated it, that's what real estate does for me and fires me up and keeps me very passionate, because I get to do this and be a part of the financial lives of other high net worth investors as a strategist and a coach, not as a planner or somebody that is the wealth decisions are abdicated to. That is why I'm passionate about real estate today and what it can do for others, and being involved with it the way we are in Mal Market Club, to be a very strategic thinking partner, to be a very a strategic advocate and a strategist, to utilizing creative wealth strategies and creative wealth finance, like what you and I learned, Fuquan, going to all these masterminds, and the practical application and management and oversight with it. I can't get enough of it, and it gets me out of bed every morning and keeps me from going to bed every night.
That was a great answer. It's definitely the service that you brought to the marketplace in the Now Market Club. Let's talk about that a little bit, because you came from the corporate world, doing a little bit of that, and then you just say, you know what, this is something is not right about this. There's more that investors can get out of this. I'm going to lead this, and create this company and pretty much take it to the next level. So let's talk about the Now Market Club and actually what's involved with that. For those of you who are interested, you can go to nowmarketclub.com and see the services that Ryan and his team has to offer. But let's talk a little about that. An investor, a accredited investor, and that's pretty much the person you focus on, come to you and try to figure out how to diversify their portfolio. What are some of the first steps that you go through when you're interviewing them, or see if they're the right fit for your organization?
It's a great question. And, anytime all of us, and I'm sure a lot of your listeners, Fuquan, run a small business. You run a small business, I run a small business. And, that's kind of the lifeblood of not only this country, but really how wealth is created in and of itself. And you're right, I did come out of corporate America in a more traditional financial planning and traditional insurance role. And I enjoyed doing that to the extent that for most Americans, Fuquan, 90% of Americans, that's all they ever get access to is traditional Wall Street investments through their 401k plan, even though I don't particularly care for it. But I don't throw it under the bus, because for most, that's the only shot they have at trying to become wealthier. So I don't disregard it. However, when you're sitting, thinking about your own money and going, does it have to be this hard? Why do I have to go work for 40 years at the same job or the same company? Yeah, you can switch jobs, but you're ultimately abdicating control of your time when you're working for somebody else. And as time was going on, while I was enjoying what I was doing, more and more of my own personal wealth was transitioning to alternative investments, namely real estate related asset classes, that, and I don't know if we'll get into all those today, but, real estate rentals, second liens that you do a lot of work with, first liens, like I do a lot of, all of those types of assets. More of my wealth was shifting to that. And I was realizing, as I was still doing my day job, but yet my wealth was nothing what I was doing at my day job, I realized that there was a problem here, because I knew I didn't necessarily have all the answers. I didn't have all the answers. I still don't have all the answers to everything. That's why we have such powerful relationships, between our masterminds, Fuquan, and working with each other and sharing ideas with each other. I realized for other high net worth investors like myself, I'm like, where do you go to strategize? Where do you go to run wealth ideas? If I want to have this certain amount of wealth because I have a multi-generational wealth plan, for example, with my niece and my nephew, even with my parents above me and my niece and nephew below me in my generation, who's going to help me with that? Because what I was finding, every other traditional financial planner out there, the moment I breathed real estate and said, oh, I'm going to do this real estate thing, they looked at me like I had 14 heads and 25 eyeballs,
Don't do it. Don't do
it. You're going to lose money. It's snake oil. They're like, what do you mean? I'd look at them and say, gosh, I'm looking at these private placement funds that are really cool with these guys that are doing this really cool strategy. And they're like, private what? And I'm like, this is a problem, because it's not that just because we get into alternative investments is a replacement for wealth planning. And that's a little bit of a fallacy that's out there, that, when a high net worth investor, Fuquan, makes the decision, I'm going to get out of traditional investments, Wall Street, I'm going to go into alts, and that's all of a sudden going to, buy my life back or change my life or something. It's one piece of the puzzle. And so the Mile Marker Club came along to be able to provide that type of strategizing, that type of planning, that type of investment structuring as it relates to living your best life and how you manage it yourself. So we do a lot of teaching and training. We do a lot of coaching, and we're in a lot of deals and in a lot of strategies with my own wealth. The other strategists on my team over here embrace this and do this. So all of a sudden, Fuquan, I was realizing I can't go at this alone anymore. I know I like alternatives. I like some of these cool things. I know areas where I'm willing to take some risks on, areas where I'm willing to be, or I desire to be just more conservative and more steady, just take my consistent cash flows from alternative investments and I'm good. But market conditions are always changing. And as I was trying to talk with people in the traditional world or just my day-to-day neighbors, and I'd say alternative investments, or I say, I'm going to do this really cool concept, that we learn about infinite banking and, passive cash flows and partials and collateral assignments. You do so well and take care of your investors so well with those types of structures. They don't know what you're talking about. So I realized just out of my own frustration, I needed a community around me that could share with other high net worth successful investors, not because they're all in 100% alternatives, may only be in a little bit, or they're wanting to try to change their allocations more to alts to take more control of the actual investments they're in, because in traditional investments, you have zero control. And so that's what prompted the start of it, golly, 6 or 7 years ago now, Fuquan, was to be around a community of like-minded investors and like-minded in terms of being the stewards of our wealth and not abdicating control and the planning and the strategy and from an estate planning and multi-generational wealth and trying to teach our family lineage about wealth so we can truly sustain it, not just for me, but for other generations and for our charities that we like to be involved with and to be able to sustain that. That's why I started the club, to have another community around me of those like-minded investors. And, there's more power in what we can do together than what any one of us can ever do on our own.
Absolutely. Mastermind is the key to, growing yourself and your business. Let's talk about the blended portfolio strategy, because I hear you speak a lot about that when we're in masterminds, and you stay focused on teaching the investor how to understand how to blend that portfolio, not just to be all into one fund and having a certain portion of their proceeds allocated to different funds or different things within real estate, whether it's turnkey or notes or collateral assignment or buying a performing note. Let's talk a little bit about that, the portfolio blend.
Absolutely. So, just in the spirit of disclaimer here, we're not talking about investment advice. We're not giving investment advice or tax planning here. So just the normal to keep the compliance department happy here. But this idea of blended portfolio, a lot of investors, especially high net worth investors, somewhere along the way, they talk to a financial planner, they talk to an investment advisor, they talk to a stockbroker, they talk to an insurance agent. And there's this idea called, diversifying your portfolio. Have a little bit of this, have a little bit of that, have a little bit of the other thing. And, there's fundamentals of mathematics to that it is true. In the world of alternative investments, though, Fuquan, this idea of creating a portfolio takes on a whole different meaning, because what happens for most of us with as investors, when we decide, we're going to start doing some other things than traditional investments, usually we find ourselves in a real estate related asset class. Now, some people find themselves investing in oil wells. Some people find themselves doing conservation easements. Some people find themselves doing venture capital. I mean, there's a whole host of alternative investments out there. But for most of us, real estate is usually the first sector that we go and dip our toe in. And within real estate, then generally speaking, the first asset class that we go to is a single family rental property. And we call our realtor up and say, hey, I kind of want to own some real estate, go find me, a rental property. And they look on the MLS and say, hey, this looks like a good deal. And you go buy it. And then you find out all the things there is to learn about being a landlord. Or, maybe you have some, relationship, you got a guy, I know a guy that does something. So you call the guy and, he or she, helps you find a real estate, your first rental portfolio or your first piece of real estate. And we tend to then grow with that for better or for worse. We then decide, okay, if we get past the initial hurdle, initial shock of then what did I just do here with my money? And you keep going and you learn more and more. You keep adding, in this case, more single family rentals. You're going, in your backyard and you start putting feelers out there. Hey, I buy, properties. And that's how it usually started for most of us. And those of us that have been in the business for more than a decade now, that was way before the internet and technology and the ability to do business as a singular, an investor across the country used to just be in our own backyard. And so what has led to this idea of what we call the family investment policy, Fuquan, is realizing while we tend to have success, or hopefully have success in what we start to dabble in, and we stay there and we keep allocating more of our money to it because it's kind of, you go with what you know. But as market conditions change, and certainly the last 11, almost 12 years now since the 2008, market correction that began to occur, and everything we all know that happened back in 2008. And then you add this whole idea of the technology or the fintech revolution that's really occurred the last 5 or 6 years. No longer do we as investors hold a niche in our own backyard, especially as it relates to real estate anymore, because it's not just Wall Street money flowing into our own backyards. It's global capital today, Fuquan, that's buying that rental property in my backyard that I thought I kind of, had a little, control over.
Yeah.
We don't. And none of us as individual, even though we're high net worth investors, none of us have enough power to create or even change a market. And so the idea of blending the portfolio of real estate investments, or even more globally with alternative investments, if you're doing things beyond just real estate, is that you can't rely on a singular asset class to sustain you through a lifetime of financial freedom lived and enjoyed by passive income from those types of assets, because you're constantly having money coming back in through your rents. Using this example, that if you've got your structure managed right, or structure set up right, and you're managing it properly from year to year, you don't need all of that income. So you're constantly reinvesting to keep adding to that diversification of the portfolio. But, you and I both know at this very moment, and we're recording the show here, Fuquan, trying to buy single family real estate at any sort of scalability is virtually impossible because the prices are too high. I mean, the physical houses are there, but it doesn't make sense in a lot of markets to pay that price. So if you're just a one, asset class kind of investor, and you're now getting cash piling up because you can't go and invest it, that is what having the blended portfolio and having access to the right types of deals and a wide range of the right type of alternative deals, at the very least, it keeps your cash flow being able to be deployed. Now, it doesn't mean that you don't have to learn about those just because you're really good in one thing. You have to be learning and keeping yourself educated about these other asset classes out there, and then understanding the right mix of them. I'll just say kind of one more point on that to your question, Fuquan, about what is the balanced portfolio of alts looks like. So we kind of just talked about it in a singular asset class, and asset classes come in and out of vogue all the time and at a much greater, faster motion than what I've ever seen them in my 20 some years of investing anyway. And I can only imagine it's just going to get faster and faster. And so, as time goes on too, the needs in our portfolio, another example is the version of income versus a version of growth. And you hear that in traditional financial planning, but in alternative investments, it takes on a bit of a different meaning, because we see growth, especially today, is where some of the higher yields are at. And look, I like a high yielding deal just like you do, Fuquan, just like every other investor does. We see a big yield, we get excited, especially as investors. You just, wow, that looks like a cool deal. But just because it's high yield doesn't mean it tells the whole story. And my life today, and where members that come choose to work with us are either there and they're trying to preserve it, or they're wanting to get more of it. is passive income. At the end of the day, even though I'm still a very active investor and I run the Mile Marker Club, my wealth is, and my lifestyle is built around my passive income. And that's when you're looking at that and building that, you start to realize, a good solid 7, 8, 9% consistent, predictable monthly cash flow. That's my priority. I'm here to have that, but yet as investors, your bell, we get, whoa, what's going on over here? Yeah, shiny object. Whoa, I want to go do that. And it's like growth. Yes, we need growth in our portfolio, but the biggest thing we need to do is manage our passive cash flow. And so that income and growth component becomes part of that blended portfolio. And there's about another 13, 14, 15 components when we're helping our members structure those investment portfolios that we factor into it, Fuquan. But those are a couple of the big ones that we really spend a lot of time helping our members study as it relates to their own wealth and starting to put the analytics around that. So you start to learn what your guardrails of investing are, and they're your guardrails. They're not, what Wall Street tells you they should be. They're exactly defined to your guardrails. So you know what to invest in, and more importantly, you know what not to invest in.
That's excellent. Also, speaking of passive investment, it's good to really build relationships with people who may be active, who may have a good track record, that you can actually leverage what they're doing to, get some passive income. So looking for those operators that are operating efficient and ethically and good communication, good reporting, and everything else is important if you're trying to leverage as a passive investor, an active operator, maybe in different markets. Maybe someone who's providing you turnkey, that will, you have to have the property manager in place and everything that goes along with that. So that's good that there's a group of like-minded individuals that come together and mastermind on strategizing on how to build those blended portfolios to get those average returns between 7 to 9, or somewhere if it's a kicker 10%. And I think that's a good, for me personally, that's the type of yield that I look on my capital. If I can get higher, great. But if I'm making 7 to 10% on a deal, I'm good. Years ago, I would chase 15%, 20% because I started doing a lot of seconds. And, when it was a floodgate of inventory, you can make those yields. But I began to learn if you buy different types of assets, those yields will be compressed. I'm talking about high equity stuff that's a little bit more security, or buying performing loans that have history, may have a smaller yield. But I don't want to use the word safe, but it blends with the portfolio a little bit better. So that's good. You can mastermind with different people to talk about experiences in other sectors of the market, because people are investing all over. What challenges are you guys facing with going through some of that? Like, it's not all graded where it's said we have these deals and we're making money. Everybody goes through challenges. Let's talk about some of that. Like, what challenges you go through or the group go through to kind of get to that next level.
Absolutely. I mean, there probably is. It always seems to be a challenge, but I will tell you, literally, what we have here today is, we do a lot with high net worth investor capital, with really passive investors like me, but who are actively managing their wealth. And just to kind of dovetail off to, what you're talking about here, Fuquan, this active and passive piece, you have to be active with your own wealth management and your own wealth strategy. You can be passive in investments, like you say, find really good quality deal sponsors that can run the deal for you, but your wealth is something completely different. And, one of our challenges, and that is really, an opportunistic challenge. Right before this call with you, I was on with a large, firm that really has Wall Street capital, which is a really inexpensive form of capital that is chasing the types of deals that we have, particularly in the debt space, in the performing debt, in the performing loan space. And, they like our asset management shop, they like our investor reporting, and so on and so forth there. But the challenge is really, Fuquan, of being able, what is our ultimate mission and our vision as private high net worth investors? Because there is a role that having a large equity partner from a scalability can bring to us as private investors within the, kind of the various stacks in our funds that we can connect that to. And it really is, a nice thing for the yields and the returns. But it's identifying the risk and how much control do we wish to continue to have over the deals versus going with more of an institutional or I should say not going with, but adding an institutional equity and investment partner into our private mix. And, I liken that to, your listeners, any high net worth investor, you can kind of liken an institutional partner is if you go to a bank and get a loan. So, I know, Fuquan, you and I are connected to a mastermind. Dr. Phelps is a Freedom Founders that works with a lot of dentists. So if you're a dentist, you might go to the bank to get a loan for your business. That's bringing on an institutional partner. I know you don't think of it necessarily that way. Well, they're just the bank, but they can exert a lot of control. Yet, their capital allows you to grow and take advantage of some things in your business that you might not be able to. And so, that's really where, we're grateful that, that type of capital, finds us to be very credible. That's nice. And I appreciate that. But yet, we're in the private space. And as I mentioned earlier, Fuquan, one of the biggest challenges that all of us as private high net worth investors have is that we're competing globally. And it requires kind of this consortium of a community to go out and bring capital to the deal space collectively, because it's almost impossible for any of us to do it on our own, and let alone at any degree of scale. And so the challenge we have is we look into the future and go, how do we combine the power of high net worth capital that we all need as high net worth investors to even further supercharge our capability of our capital with an appropriate amount of institutional and that type of capital. And I don't know that if we're going to do it. I've been saying no to it for 7 and 8 years, and they keep coming back and keep coming back. And so that's one of our big challenges over here. How do we make sure we stay opportunistic for our members and our investors? And sometimes that still involves dealing with a level of institutional capital. So that's probably one of our biggest challenges. It's a good challenge.
Yeah, I would say that's a good one.
and believe me, at our next mastermind in February down in Phoenix, our Mile Marker Club Symposium, believe me, it will be a topic of conversation, that we have, because I know it's not just, organizations like ours. Institutional capital is chasing you too, Fuquan, in your business models, and so many of the other, great deal operators that you and I hang out with. And it's I know it shouldn't sound like a problem, but it is a challenge to figure out where you go to best position your investors.
Yeah, I mean, bringing in that institutional capital, leveraging that can create so many different things for IRA investors. So you got to be mindful of that as well. So that's one thing we always look at and say, wow, we could bring that in, but how will it affect what we currently have going on?
Yes.
Yeah.
And you got to stay true to yourself. You got to stay true to what, your vision is. And, I say that to investors too. What do you need your wealth to do for you? Some people it's this, other people's it's that, and none of us are the same. And you've got to have pretty solid clarity about what you want to do and how you want to do it. So anyway, it's a challenge, but it's also an opportunity. And that's, one of the things that I love doing in the club affords me the ability to do that, is to kind of always be looking down the road and looking down the horizon and identifying how do we keep our capital in the most, our investors, our members that, as we look at deals, still in the most prudent position, not just for the here and today, but 5 years from now, 10 years from now, and really generations to come.
Oh, well, generational wealth. That's key, man. Dan, I thank you for coming on to the show and sharing this information with us. Ryan Parson, Mal Market Club. Guys, be sure to go to the website, malmarketclub.com. Find out more information on how you can become a member of the Mal Market Club. Oh, man, this was really some good stuff. I know they're going to enjoy this episode. And thanks again for coming on the show. I really appreciate it, man.
It's my pleasure. I appreciate the invitation, Fuquan, and happy holidays to you and your team, and a very prosperous new year to you and all your listeners.